Most crypto projects try to win by being faster, cheaper, or more hype-driven than the last one. Polkadot took a somewhat different route. It tried to build the network that connects the rest of the networks. And for years, that idea looked smarter on paper than it did in price action. Dot had serious engineering, respected founder, and a strong technical thesis, but the market kept treating it like a project that mattered less than it probably should. Today we're going to break down Polkadot's origin story, what it actually does, how its tokenomics really work, and the biggest risks holding it back, alongside the exact math on how many DOT you would need to retire as a millionaire in 3 separate scenarios. Now, let's get into Polkadot. This is not financial advice, always do your own research. To understand Polkadot, you first need to understand the problem it was built to solve. In the early days of blockchain, every network was isolated. Bitcoin did Bitcoin stuff, Ethereum did Ethereum stuff, Solana did Solana things. But if one chain wanted to communicate with another, the process was clunky, expensive, or dependent on fragile bridges. Well, Gavin Wood, one of Ethereum's co-founders and the man who also wrote the Solidity language, created Polkadot. His goal was ambitious: create a system where different blockchains could share security, communicate with each other, and scale without forcing everything onto one congested base layer. That is the real Polkadot thesis. Historically, the network centered around parachains, auctions, and cross-chain interoperability. That helped Polkadot build a technical identity, but it also made the project hard to explain to normal investors. It became one of crypto's classic cases of strong engineering but weak narrative. Now the network is evolving again. Polkadot 2.0 is pushing toward more flexible block space and better capital efficiency, while Jam remains an important long-term architectural idea. But the key word is evolving. These are not magic fixes. They are still part of an ongoing transition, and here you may agree with me or not, but I will only care when we see real usage. Because ultimately, Polkadot is not just trying to be another blockchain, it is trying to become the infrastructure for blockchains. That's pretty ambitious. The question is whether the market will ever pay for it properly. For most of Polkadot's history, its tokenomics were a genuine problem. There was no maximum supply cap, the network minted roughly 120 million new DOT every single year, which generated around 10% annual inflation. That's a significant problem for any long-term holder, you have to admit it. Your tokens are being diluted just relentlessly while the price tries to find its rooting. Then, on Pi Day, March 14th, 2026, everything changed. Through community governance, Polkadot passed Referendum 1710 with a staggering 81% of participants voting in favor. The result was a permanent hard supply cap of 2.1 billion DOT and a 53.6% cut to annual token issuance, dropping it from roughly 120 million new DOT per year to approximately 57 million. That was a Bitcoin-like move, and it caught me by surprise, pleasantly of course. A mathematically constrained supply entering the market for the first time. Inflation collapsed from around 10% to roughly 3.1% annually. And unlike Bitcoin's halving, this wasn't a pre-programmed event. It was the Polkadot community choosing scarcity through on-chain democracy. And that gives me hope that these guys understand what's up. And if you're one of those Polkadot folks, well done to you, man, and the rest of you. But there's more. Core time sales. The mechanism by which projects access Polkadot's computing power now burn a portion of fees. 80% of core time revenues are burned from circulation. So the network has a structural burn mechanism on top of the reduced emissions. Currently, about 1.68 billion DOT are circulating, which is 80% of the hard cap. The fully diluted market cap sits around $2.6 billion, which is a number worth sitting with when you consider what this network actually does. Lastly, one caution worth naming with regards to the tokenomics. Just like you can change your government every 4 years through elections, the supply cap that they introduced can technically be changed through governance. OpenGov is a real on-chain democracy, which means future votes could could alter the parameters set currently. And that, my friends, is the double-edged sword of a truly decentralized governance system. Looking at the network growth, in 2026, Polkadot ranked first globally in total developer commits, over 8,900 active developers and nearly 700,000 code commits in a single year. That is extraordinary for a project most of crypto has written off as dead. And now that Polkadot 2.0 is complete, the biggest change is agile core time. The old system forced projects to lock DOT for 2 years, parachain slot auctions just to get on the network. Now it works like cloud computing. You buy the block space you need when you need it. In Q1 of 2026 alone, over 150 new apps joined the ecosystem. Real-world traction is building too. Peak saw 500% transaction growth in a quarter. The Kill protocol issued 500,000 government-backed identity credentials, and Mythical Games brought mass market gaming to the network. The wildcard, though, is Jam, the Joint Accumulate Machine, or Polkadot 3.0. It transforms the network from a parachain coordinator into a general-purpose decentralized supercomputer. The target specs are impressive: 1 million transactions per second and 850 megabytes bandwidth. For context, Solana does 825 megabytes per second. To achieve this ambitious goal, Polkadot has 43 teams competing for a $10 million prize to build the Jam, with mainnet targeted for later this year. It's hard to imagine it, but if it lands, this is a completely different asset. And the institutions are sniffing around too. 21 Shares launched the first US spot DOT ETF on Nasdaq just recently in March. As of May, the time of the recording of this video, there have been modest inflows so far, but the regulated on-ramp now exists, so the next few months and years will be interesting to watch. Now let's talk about the risks, because let's face it, Polkadot has real ones. First, 6 years of underperformance. DOT sits 97% below its all-time high. It survived the 2021 bull run, a string of high-profile sports sponsorships, and the Polkadot 2.0 narrative. But none of it produced sustained recovery. This whole thing kinda brings Algorand to mind, as it proved you can have world-class technology and still lose the market's attention. Polkadot could be next, and I don't want to see that. Second, adoption lag. DeFi TVL under $300 million is a real problem. The truth is that Ethereum's L2s and Solana continue to dominate developer mindshare and liquidity. And being the most sophisticated interoperability layer in crypto doesn't automatically mean being where people actually show up. Third, the Hyperbridge exploit. In April 2026, just very recently, attackers compromised a vulnerability in Hyperbridge's Ethereum side gateway contract and illicitly minted 1 billion bridged DOT. Polkadot's native network was untouched, yes, and shallow liquidity capped losses at around $237,000. But the narrative damage was real, and several exchanges actually temporarily halted DOT. That's to say that the cross-chain bridge risk is structural, and you cannot fully engineer it away. Fourth, the governance cuts both ways, aka the tyranny of the majority over the minority. The hard supply cap and emission reductions were passed by token holders, yes, but they can theoretically be reversed the same way. OpenGov is real democracy, which means that tokenomics aren't locked in. Depending on your view, that's either reassuring or unsettling. Now let's head to the price performance and the Millionaire math. A quick trip down memory lane tells us that DOT started trading in August 2020 at around $3. It then ran to an all-time high of $55 in November 2021, which was one of the most spectacular bull runs of the market. Then came the bear, of course. By February 2026, DOT had fallen to a multi-year low of around $1.13, more or less erasing the entire 2021 surge and then some. From its all-time high, that's a 98% drawdown. Since then, DOT has consolidated around the $1.20 to $1.30 range and today it trades at approximately $1.25. That's the starting line, so let's run the math. First is the bear case, in which DOT reaches $5. That's back to pre-bull levels and a 4x from here. You would need 200,000 tokens, which is roughly $250,000 today. Next is the base case, in which JAM delivers, the ETF draws institutional flows, regulatory clarity unlocks the more conservative capital, and we hit $15 a piece. This would be a 12x and you would need 66.7 thousand tokens, costing around $83,000 today. And finally, my absolutely unhinged, I know, bull case is $40 per DOT. Just imagine Polkadot becoming the foundational layer for AI, gaming, and deepin at scale at that. At $40, the fully diluted market cap would be $84 billion, which is still below Ethereum's current valuation. With this 32x return, to reach $1 million, you would only need to get 25,000 tokens today for about $31,000. These are my three scenarios, from moderate all the way to unhinged, but it all comes down to the one real question in the end. Has the market properly noticed that Gavin Wood built the tools that made Ethereum and then left to solve the problem Ethereum couldn't with Polkadot? Has it noticed that 6 years later, Polkadot has the most active developer community in crypto, a historic tokenomics reset, and one of the most ambitious protocol upgrades the industry has ever seen on deck? It seems like the market hasn't noticed these things. Or maybe it has, and has already decided. That's the bet you're making either way. Drop your DOT price targets for 2026 in the comments, and let's see where you land on this one, and ultimately, how far off from the market we will all turn out to be. If this breakdown helped you think more clearly about Polkadot, hit the like button, subscribe to the channel, and share this video with someone who's been watching DOT bleed for 3 years and still doesn't understand what's going on. Because now they will. I'll see you in the next time. Ciao.